What's up, everybody? Welcome to another edition of Dave's Daily Dive, where I dive into the stock market charts of the day, giving you a bit of analysis on the major macro charts like the S&P 500 and the Dow and the Nasdaq and the VIX and the Euro and whatever the heck else I want to talk about. But then I don't leave you hanging. I give you 5 Zacks Rank number 1 strong buy stocks that are breaking out to new highs. These are very interesting, good trade ideas here because since there's Zacks Rank number 1 strong buys, you know that there's earnings estimate revisions that have been going to the upside, which could be pushing that stock on through to new highs. And then obviously the momentum associated with them being at these 52-week highs. So I got 5 of those for you. But first, the S&P. Now, for a while, guys, if you remember, I was working off of this fib, and then I did a fib extension, and, it was all good, right? Basically, it was this to this, and then we had the retrace, and then this was an extension of that, okay? So once that target got hit over here, basically 75, 78, 75, 75, I think was the original target, but up there, then I went ahead and drew a new fib to give us an idea of where a possible retracement might go. Now, yesterday, we almost got all the way down to this 23.6% retracement at 25.40 on the S&P as the market sold off. I was joking about the great pullback of October 2017 yesterday, as a few people were wondering about the pullback, and we weren't making fun of it, but I mean, when you've gone through the Great Recession with clients and people that you're trying to talk off of ledges, a few handles to the downside is comical. So seeing the market sell off just a little bit was pretty funny. That so many people were so worried about it. I don't know why. Anyway, so the market came down to 25.44 yesterday. Today we've got a little bit of a reprieve, but don't get too excited because didn't really take out yesterday's highs and didn't really rally up too much. So that still puts a little bit of pressure. So that means this 25.40 is still a key level to look at. Of course, yesterday's low is going to be a swing low. Going to have to see how that works out. But a little bit of dark cloud here as the commodity channel index has gone from overbought territory and now is at the zero line. So one of two things happens in this scenario. One, it crosses down through the zero line and gives you a sell signal. The other thing is a bounce here. Now, this happens a lot on individual stock charts. We may even see it in one of these 5 that we're going to talk about later. Overbought CCI comes down, bounces at the zero line as the index or the stock is near highs, and then it's a continuation pattern, meaning it's likely to happen again. But if you look here in August, down through the zero line, that's a sell signal, and then the market did go lower. I mean, it came higher a little bit first, so you could argue maybe this doesn't exactly queue up, but it's pretty close, guys. So anyway, just something to take a quick little note at. 25.40 on the S&P 500. That's the next place you want to look. A couple days ago, I titled my write-up, Dow Don't Care, because the Dow don't care. And what I mean by that is that new highs seem to happen just about every day. Yesterday's pullback, really nothing to speak of. We haven't been at the 50-day since September 8th. Last time the market saw the 50-day moving average. Since then, it's been a pretty nice rally to the upside. Even today's move didn't take out yesterday's high, didn't close above yesterday's high, also just like the S&P 500. So it does lend itself to a little bit more downside action. Here, the commodity channel index is not as mature in its development of a sell signal as it was on the S&P, but you do have overbought CCI. And then again, we'll see if this gets to the zero line. Does it bounce or does it cross over to the downside? So that's something to keep an eye on when you're talking about the Dow. One area of the market that hasn't done as well as the large caps of the Dow has been the Nasdaq. Now, again, you can see these fibs I was playing with before. We're going to adapt these now, okay? Because basically these targets have been taken out. So now we're going to shift a new target here. I could argue that this is a smaller fib we should pay attention to, the larger fib. I think actually the smaller fib is going to be good for now. To give us some perspective, let's see if we can zoom in on this so it looks a little better. You see the highs there, the lows here. So working off this fib, you can see sort of intraday yesterday came down to the 38.2. Rally up again today, failed to get past that 23.6. So 65.72 providing upside support. Let me clarify. We got above that level, but we didn't close above that level. And you know it's all about the close. An inside day here, pretty much. Well, I guess we closed there, so not technically. But we're inside the range of yesterday, right? Fully inside the range of yesterday. So I'm expecting to see a little bit more downside out of the S&P, out of the Nasdaq here. I would put yesterday's low as a short-term support level. But look at all of a sudden this line here, guys. This is the 50-day moving average coming into play. Last time traded down there, it was in late September. So perhaps we're looking for another trade down to the 50-day. But look, in the grand scheme of things, this is still fantastically bullish. A great looking chart. Has come down to the 50-day on multiple occasions, found support, and then found a way to get higher. So even if it dips underneath the 50-day, doesn't mean it's the end of the world, okay? You can still be optimistic on the NASDAQ as well as the rest of the market. Now, I will tell you that we got a good report out of Alphabet and Amazon after the bell today, so I would expect to see those NASDAQ futures rally overnight and us to be in a nice little position as we hear that opening bell tomorrow morning. Okay, so that's all I really want to touch on is these three major averages in terms of the macro stuff. Now let's get a little bit more granular, talking about these 5 Zacks Rank #1 strong buy stocks, breaking out to new highs. Ameriprise Financial, my friends, beautiful breakout here. Really, this started, in the 140, 150 range. Stock rallied up. Here's confirmation of that. So you have this high. Market gets above it, comes down to retest it, and then boom. So that's a great sign there. If you want to chase this, you can put your stops underneath 150. That's a little over 10% right there that you're going to have to the downside. But very strong stock, tons of momentum. This commodity channel index crossing over in early September and just has not looked back. That's Ameriprise Financial, ticker AMP. Then you've got Cons in the the retail consumer goods business, retail credit basically, and these guys have been doing quite well. Again, another scenario where you get this top. I know you guys know the cup and handle. I think the cup and handle is supposed to last a whole lot longer than that, but you see the interaction with this previous resistance level. Again, the stock gaps up, comes back down, crosses back over, finds a bid, now is off to the races again. So this previous high, 29. Again, you could chase this, put your stops shy of 29, really 28, probably even better. But obviously the big move the other day. So if you're hoping to jump on board that one, that's Cons, ticker CONN. Then we've got Diodes, ticker DIOD. So these guys do semiconductor and analog products in Asia. And this thing has been in fuego recently. Look at turning up after being in this longer sort of consolidation period, chopping back and forth, starts to find a bid, leapfrogs this 50-day moving average, and it's been off to the races. It's always a good sign when you have this nice positive slope out of your 50-day moving average and the stock running away from it. So that's pretty good. Not for the faint of heart here, but what I'm seeing, this little bit of volume over here to go along with the little brief sort of consolidation choppiness here in the 30s. So again, if you are going to chase this, I'll be putting my stops just shy of 32. That's Diodes, ticker DIOD. Then we've got an oldie but a goodie, Northrop Grumman. So basically security, autonomous systems, cyber strike, logistics, all sorts of fun stuff over here. And a little bit of a down day today after getting up above 300. I would wait to see how this one plays out. Can it come back down under the 290 level? That might be a little bit more comforting of a place to buy. The 50-day moving average down at 280 and change. And this stock has a tendency to move along this 50-day moving average too, so it's done so for a while, basically since leapfrogging that level in February of this year. You got to think that with increased defense spending, or at least the hopes of increased defense spending, that Northrop Grumman is going to continue to benefit from that, but we'll see how this plays out. Again, I'd wait a little bit before setting my sights on that one. And then the last one, Toll Brothers. Obviously, we're getting some great numbers coming out of home builders. I know KB Homes had a pretty good report a few weeks ago, and then now you got Toll Brothers pushing through this $41 level of resistance. Now it's up here at new highs. 50-day moving average down at 40.58. So again, this one's a little bit. I mean, this is heated up pretty good. Basically, a gap and go, which it's never come back down to test. So another scenario where you can go ahead and buy this. You put your stops just a little bit more than 10% out. That seems to be the magic number on a lot of these, and potentially the stock could continue to go higher with the 50-day providing support, even should the stock keep on ticking up. That's Toll Brothers, ticker TOL. That's all I got for you here today with Dave's Daily Dive. If you're bored, come check me out on Twitter at Bartosiastics. As always, I am the editor of the Momentum Trader, as well as Surprise Trader now at Zacks.com. So check me out there. Check me out on Twitter. Either way, I'll be back next week with another one of Dave's Daily Dives. Thanks, and have a great day.